Hello. The company being analyzed today is Solex Energy Limited. This is a company which manufactures solar panels. So today we're going to analyze the company's financials, what it actually does, the company overview, and finally its future growth plans. So let us start. First, we have the market cap of 1,332 crores. So it's a pretty small cap company, not the biggest. Current price of one share 1,233 rupees. Stock price to earnings ratio of 25.4 times. Book value, that is assets minus liabilities per share, is 167 rupees. Return on capital employed, return on equity are high, but sometimes the figures shown by screener.com do not match the figures shown by the company's own reports, but they are high. Profit and loss of the company from 2015 all the way to 2025 on the right. Here we have sales in crores, operating profit or EBITDA, and at the very bottom, we have the net profit. Okay, so in 2015, the company only had sales of 6 crores, 2018, 101 crores, 2019, 149 crores. After that came a period of decline. 2022, 72 crores. You can see sales are declining. Operating profit declining from 8 crores to 2 crores in like 4 years. But then comes the comeback. Now, in 2024, 366 crores, and finally, fiscal year 2025, 660 crores of sales, 69 crores worth of EBITDA, and at the very bottom, we have 40 crores of net profit. Strong comeback in recent years, and this gives us these growth figures. Compounded sales growth over last 10 years has been 59%. Last 5 years, 37% compounded. Last 3 years, 109% sales growth compounded. Compounded profit growth has been even stronger. 82% compounded profit growth. Last 3 years, 243%. 42% compounded sales growth, and return on equity, screener.com shows it's rising. 5 years ago, 23%. Last 3 years ago was 28%. Last year was 39%. Now, in terms of cash flows, the company is not really doing that well. Pay attention to cash from operating activity. Earlier years, okay, you can say something, 5 crores, 2 crores, 2 crores. But then in the recent years, you can see 2025 minus 49 crores. Okay, so not exactly the most solid of cash flows. Yeah. Now let us go to what the company actually does. This is the company's overview. Okay. So Solex in a brief. Now this is a bit blurry, so we will keep zooming in. Okay. We'll zoom in a bit. So Solex in a brief. First of all, the total manufacturing capacity is 4 gigawatts. 4 gigawatts of module capacity. What are modules? Consider them panels. For simplicity's sake, consider them panels. 10,000 plus projects have been completed. They have shipped over 3 million plus solar modules. And very important, look at this. Their order book, that is the orders that they currently have from customers, is 40,000 plus million rupees or 4,000 crores of order book. The revenue was like 660-ish crores and 4,000 crores of orders that they have right now as of September 30th. So a lot of orders. Then you can see the financials, fiscal year 25, return capital employed 27.4%, net debt to equity 0.78 times. Okay, that's not the best, not the worst. Return equity 26.7%. Four countries they're exporting into: Europe, North America, and Africa. These are countries. Okay, Africa. Okay, these are continents. Okay, Europe, North America, and Africa. So many continents, different continents, they're actually providing to. Well, what happened? Now, here we can focus on many things, but we will focus on these. First of all, now look at this capacity expansion plans. So, the current module manufacturing or panel manufacturing capacity is 4 gigawatts. In fiscal year 2027, that is the next fiscal year, they're going to add 2.5 gigawatts. And in fiscal year 2030, they're going to add another 3.5 gigawatts. So the company is going for some big expansion. Then they're going into cell manufacturing. What is cell? Solar cells. Solar cells are a component of solar modules. Okay. The target capacity of fiscal year 2027, which is the next fiscal year, 2.2 gigawatts of cells, 3 gigawatts of another additional more gigawatts of cell capacity in fiscal year 2028, and adding another 5 gigawatts of cell capacity in fiscal year 2030. And think about solar cells, they're a component of solar modules or panels. This is backward integration and can help the company in increasing their profit margins as they're making their own components. Okay. And you can see the impressive track record, profit after tax becoming 40 times between fiscal year 2022 to fiscal year 2025. We saw it was a bit of a comeback for them. Now, diversified product portfolio. Okay, we got solar modules, we got solar rooftops. All right, we got what? Solar grid connected systems, solar homes, street light systems. Okay, solar water pumps. All right, what else? Diverse products enabling the company to cater to varied market needs. Okay, so they can cater to varying market needs. This can be for homes, like for us people. It can be for solar water pumps, which can be for like agriculture purposes. Then we saw the solar brands. Now, solar EPC services. This is basically that they can design the solar modules and they can install the solar modules. And of course, the land identification for the projects and all of that. And these are the solar EPC, engineering, procurement, construction projects they have done before. Then, diversified clients cross industry. Their clients include Amul, Torrent Power. Okay, that's a big company. We got ONGC. We got, and we got some big clients. Now let's move onwards to this expansion plans. Okay, we have already seen this, but this is some big expansion plans. So in fiscal year 2022, they only had zero point 0.7 gigawatts or 700 megawatts, then 1.5 gigawatts of capacity in 2025. In 2026, they expanded this to 6. And these are the plans. Okay. And the solar cells, we already saw it. They don't have it right now, but they're planning to expand. And the thing is, for 2.5 gigawatts of solar modules and 2.2 gigawatts of cell, they need around 1500 crores of money to actually fund this expansion. 1200 crores is for the cell only, and 200 crores is for modules, and 100 crores is for working capital. So they need a lot of money to raise for this. And how are they going to raise this 1500 crores? Again, this is only for 2.5 gigawatts of solar and 2.2 gigawatts of like the cell ones. We're not even talking about this one, this additional 3.5. In order to raise this 1200 crores or 1500 crores, they're going to raise 1000 crores of debt and around 500 crores of equity, that is issuing shares and all that. So, yeah, a lot of capital expenditure and money is going to be needed by the company. I hope it doesn't strain them. Then comes their aspirational, their target for growth. They want to achieve 4x revenue by fiscal year 2027. We are currently in fiscal year 2026, by the way. So last fiscal year, 662 crores or 6,622 million rupees, as we saw. This year, they want to have a revenue of 2,000 crores. We are currently in fiscal year 2026. December is about to end. It's like third quarter. A happy new year in advance. 2,000 crores of revenue. Then they want to reach 3,300 crores of revenue by fiscal year 2027, next fiscal year. Massive. And in addition, they want to grow their profit after tax even higher. So 42.8 crores of profit after tax for fiscal year 2025. This fiscal year, they want to achieve 120 to 160 crores, even faster. And they want to achieve 264 to 330 crores of profit after tax by fiscal year 2027. And these are their aspirational profit after tax margins, higher than right now, 6 to 8% fiscal year 26 and fiscal year 27, 8 to 10%. Why higher? Because of the solar cells. All right, it is backward integration. That's why. And again, This is what they're expecting. Capacity utilization for the TopCon modules and a monoperk. These are different types, different tech, you can say. Okay, different tech. So these are the capacity utilization. What percentage of capacity that they're expecting they will use? And you can see a monoperk. First of all, monoperk for fiscal year 2026, they're expecting 54% capacity utilization and TopCon 68%. So additional, of course, 2.5 is going to be added. And then fiscal year 2027, TopCon, they're expecting 70% capacity utilization and all of the monoPERC to be upgraded to TopCon. So monoPERC is the older solar module technology. It's actually being replaced. Many companies are doing it. It's an industry trend and they're moving towards TopCon, which is more efficient in terms of energy utilization and whatnot. Fine revenue potential and I guess what is this gray one? These gray numbers, I think, are like the additional utilization coming in. But again, I'm not going to go in too deep because I don't know what the gray ones mean. Actually, they are pointing out like these arrows. You can see my fault. I'm stupid. I didn't see it. The arrows are pointing out so you can read it, but you can see they're aiming for some massive, massive revenue growth. Massive, and they're expecting better utilization, which is good. Better capacity utilization, they're at least expecting. So that's good. Now, the latest financials. So, in the quarter two fiscal year 2026 alone, they were able to achieve 154 crores of revenue. They were able to achieve 11.8% EBITDA margin and 18.2 crores. However, profit after tax actually declined, 3.7% profit after tax margin. Now, the thing about the solar business, and many companies observe this, is that quarter one and quarter two, it's a time of the build up, meaning they're taking in orders, they're manufacturing all that, and bulk of the sales come in quarter three and quarter four. So sometimes it does happen that quarter one and quarter two profit margins are a bit effective, affected because what they're doing is they are making a lot of products, but they're not selling right now. So there's a lot of buildup of inventory and a lot of raw materials are getting used. The cost is there, the expense to make stuff is there, and the majority of the sales will come in quarter three and quarter four. So, like lower margins sometimes happen in quarter two, quarter one, and quarter three and quarter four compensate with higher margins, and the full year financials look nice. And also, there were rains this time, and also GST cuts happened, so the customers, holding off bit of the sales and all of that. And some of the sales are like held off, meaning they are postponing the sales, but expenses. Okay, the expenses to actually manufacture products is still there. Expenses are there, but sales got a bit postponed because GST cut is coming. So, customers are saying we will buy at the lower GST rate, so lower price for us. And lower profit after tax, lower earnings per share, 4.83 rupees. Not half, but a big fall from like 8.8 rupees. And let's go to the another page. We only have a few more pages. So this is of course historical snapshot. You can see in H1 alone, what is H1? Quarter 3 plus quarter 4, H1 known as first half. So quarter 1 plus quarter 2, sorry, quarter 1 plus quarter 2 of the financial year already produced 415 crores. EBITDA, you can already see 60.9 crores. Oh, and also one more thing. In quarter 2, we saw that EBITDA margin increase. My fault. EBITDA margin increase. So operationally, there was no problem. But stuff like interest payments, they went higher and taxes went higher. That's why profit after tax was lower. Yeah, because EBITDA increased. Yeah, EBITDA margin increased. So yeah. And overall, it seems quarter one was so good of like this financial year that H1, quarter one plus quarter two combined, profit after tax margins still reach 7.3%, which is way higher. And you can see already the first two quarters already did 30 crores in profit compared to 42 crores last fiscal year. You can see it's way more than the last fiscal years combined. And earnings per share have already reached the first two quarters 27 rupees per share. 39 rupees for the whole fiscal year, last fiscal year. So you can see the company has gone for some big financial growth. And finally, we have one last thing. We have one last thing to see. First, return on equity according to the company's own calculations reached 32.4% in the first half. And you can see risen so much. And return equity, return capital employed And other metrics like return on invested capital, return on tangible equity, they're very important metrics in finance. Very, very important to assess a company's like efficiency. Then debt to equity ratio, net debt. Net debt is total debt minus the cash and cash equivalents of company. So net debt to equity ratio, lower the number the better. It reached 2 times, which is not good. It dropped down to 0.78 times, currently 1.33, which is okay. This is not the okay. It's a new company, maybe. Working capital days. Current assets minus current liabilities is working capital, and working capital days are the number of days it takes to convert working capital into revenue. Lower this number, the way better it is for the company's financials, especially its cash flow. Cash flow is very important. Lower this day's number, lower this figure, the better it is for the company. It was declining, then it's increasing, but they are in a bit of an expansion phase, so it does happen. Let us see how the working capital days evolve in the future. So this was it. This was what was this? Solex Energy Limited. Have to say they're going for some massive, massive expansion. 2,000 crores issue revenue in this year alone. We already saw their aspirational revenue targets. 4x revenue, 4 times revenue by fiscal year 2027. We are currently in fiscal year 2026. So yeah, it's going to be an explosive quarter 3 and quarter 4 also then. Because if they want to reach, like I think they reached like 300 something crores. What revenue did they reach? Hold up. Let me just see this. Quarterly results. Quarterly results. Okay, they reached like 400 something crores of revenue in the first, what was it? Here, the first half. Look, this is quarter 1, this is quarter 2. So they reached 400 crores of revenue. They need to reach 2,000 crores as far as I remember. So quarter 3 and quarter 4, they need to reach a combined almost 1,600 crores. Wow, it's going to be an explosive year for this company. I hope I'm remembering that aspirational target correctly. But it's going to be quite an explosive year. Let us see if they can achieve that. Very exciting time for the solar sector. Massive expansions going on and profit margins are rising. Let us see if they can compensate for like better with better cash flows and all of that. If they can achieve that too, it will be quite amazing. Also, return on equities and return on capital employed are also rising. That is great. Let us see better cash flow in the future if they can achieve their revenue targets, if they can achieve their expansion plans, and how much money they will need to raise. 1,500 crores. Let us see if it puts a strain on the balance sheet or not.